China is manipulating its currency, according to incoming Treasury Secretary Geithner. We would like to have a little different look at what it is to manage a currency, because I wouldn't think it's all that clear who the manipulator is in this environment. Sure, China has been trying to have a stable exchange rate, has been trying to keep its yuan reasonably weak to encourage exports, but that doesn't help anymore because no matter how cheap the yuan is, exports to the US won't fly right now because of the weak domestic economy in the US. Having said that, in the US there have been very aggressive efforts to move the exchange rates. There hasn't been outright intervention in the currency markets. But last summer, when the guarantee was given to Fannie and Freddie, to the agency securities, that was done to avoid a run on the dollar. Having said that, overall the policy in the US has been to weaken the currency, despite the ritual proclamation of the Treasury Secretary to say the US is interested in a strong dollar. Notably, Fed Chairman Bernanke has been talking how it's been very valuable for the US during the Great Depression to get off the gold standard, to allow the price level to rise above the pre-1929 level. His view is, in our assessment, that going off the gold standard, weakening the dollar, alleviates the hardship of the people. He has used those words in the past. Now, of course, we don't have a gold standard anymore, but he's still trying to weaken the currency in order to get us out of this current mess that we're in on the credit markets. I just like to caution that you cannot depreciate yourself into prosperity. But what he has been doing is he has instructed the Federal Reserve to buy mortgage security, to buy treasury bonds. When you do that, while the homeowners love that and have lower interest rates, you're artificially increasing the prices of these securities. So basically, any rational player would abstain from buying these. And sure enough, you can call China a currency manipulator for still daring to buy these securities now that the Federal Reserve has pretty much put them off limits to any rational investor. As far as the Chinese are concerned, however, it would be in their interest to allow the currency to appreciate. And that's precisely because it would help them, not because it would help the US. The inflationary pressures, as the recovery may happen, will be just too tremendous if it doesn't allow the currency to appreciate. And more importantly, right now, China still has a very tight environment. It's allowing builders to collapse. It allows housing prices to go down. Its stimulus, while it appears massive on the headline, the 500 billion stimulus that's been announced, is far smaller than they could otherwise do. If they allow the stronger currency, the cost of inputs would go lower. What the Chinese have to do is develop a middle class by providing entrepreneurs an incentive to produce, and the best way to achieve that is with a stronger currency. So for the time being, China and the US are playing a game of chicken. And right now it looks like the winner should really be the one who gives in first, rather than one who sticks out their neck. Because ultimately, the strong policy is in the interest of the citizens of the respective countries.